Today, a rare edition of Future Forward, as Alexa and I admit that we absolutely don't understand what's going on.
Which isn't to say we're not going to try. What's happening on Wall Street, known broadly as GameStop, is upending both the left and the right.
So to explore, we're bringing on a guest, but not just any guest. Her name is Katy Perry. No, not that one. She is the head of marketing at Public.com, one of the new trading platforms in the middle of all this.
She's joining us on the pod to dig into how grassroots traders are outnumbering the short sellers. But it's far more than that.
I'm Steven Rosenbaum, and this is Future Forward.
I'm Alexis Scordato. Let's launch.
Hey, Perry, Katy.
Hi.
Hey there. You know, we are doing great given the complexity of the world we live in. And thank you so much for diving in. We are counting on you to explain all of this crazy stuff because we're just stumped.
Yeah, well, thanks for having me on. It's definitely been an interesting week for my industry. I feel like for the first time ever, all of my friends know what I do. So can't complain about that.
So let's start right there. Tell us about Public.com. What is it?
Sure. Public.com is an investing social network. So it's a mobile app where you can invest in stocks and ETFs, and you can do so in what's known as fractional shares. So sort of like Uber Pool for investing. If one share of Amazon is $3,000, on our app, you could buy $1 worth of Amazon and own a tiny portion of that share, which just makes the stock market more economically accessible. The other side of what we do is a social network. So we have a feed where you can share the why behind your investments. We really think that there was a lack of sort of transparency and conversations around how these decisions are actually made. And that was actually keeping a lot of people out of participating. So within Public, if you opt to invest in a company, you have the opportunity to share with your friends and the community at large why you did it. Why do you believe in that business? And from there, conversations can sort of flow. And through osmosis, by virtue of being in the community, you can strengthen your financial literacy.
So before this whole thing blew up, which is now what, 3 weeks, 2 weeks, like, were you guys just kind of moving along, adding users, everything was kind of, and has this just been like?
It's been a wild few days, I will not lie. I always want to start off by shouting out our engineers and our customer support teams who are just heroes. But I will say we were growing pretty fast before all of this. We grew 13x in the last year. Right after we raised our Series B last March, we all went obviously remote. So we've been functioning very well and with a lot of speed as a distributed workforce. And by virtue of kind of being forced in that setting, we've established kind of practices that have allowed us to, in this time, be very, very agile. So it's kind of been business as usual, a little more business than we're used to, but we were ready to go.
Katy, as a fellow marketer, can you just talk about the pace of this week? Like, how are you responding to the changes in real time? Were you all in like a Zoom war room? Like, talk us through the week and what it felt like to be in the hot seat.
Yeah. So our kind of core mission has always been to make investing mainstream. So with all of this going on, investing is mainstream. So it's very much aligned with everything we've been doing. We've always kind of had this parallel path strategy of evergreen cadence of, product announcements and other things that we can plan for. With that, we always have been structured to kind of jump on moments where business news are popping into the mainstream. So one example would be Airbnb's IPO. We did a big stunt around that. Any moment where investing is in the mainstream is so in line with everything we're doing because we feel like for most people, these topics have been made to feel inaccessible and closed off. And when the concept of investing is touching on something that you yourself are experiencing, great opportunity to showcase kind of our product and how we're differentiated. We were obviously very coordinated this week. And we really leaned into our company principles. Even when we were a much smaller business, the leadership at Public had 10 clear company principles that we all kind of aligned on. And we use those to guide decision making with speed to make sure that as things are moving fast, we're staying true to who we are. So one of those is honesty kills bullshit. And that just means being super transparent is core to our culture. We feel like that being upfront and honest is the best way to communicate both internally and externally. So you saw that kind of come through in our communications this week, where we were, telling people updates along the way and being very candid about where we stood on what was going on. So operating with those principles was really helpful just to keeping pace with everything that was happening, but doing so in a way that was true to who we are as a business.
So try and explain, first of all, when did this start to bubble up? When did you internally have a communication go, wait, things are going a little bit strange? And there was some issue where Robinhood stopped trading, but let larger, talk about, I know you don't want to talk about Robinhood specifically, but let's understand what happened, how the SEC got involved, and how you and Robinhood dealt with it differently.
Yeah, well, the seeds of this have been planted for a little while. I mean, the Wall Street bets conversation obviously really started accelerating the past couple of weeks, and I think it hit a boiling point earlier this week. But we've always kind of been, like I said, this has kind of been business as usual for us. One of the things we introduced in the summer when this sort of behavior was starting to happen with Hertz is we actually built into the UX safety labels on securities that might be potentially risky according to the SEC. What happened with Hertz, if people aren't familiar, is the company was essentially bankrupt, but they were issuing more shares of stock. And there was a lot of flurry in social around people buying Hertz stock, looking for a quick gain. And at that moment, we realized we needed to kind of build something in our app to balance out the access we were granting with responsibility to new people coming in. We never want to kind of tell someone where to invest or how. We feel like people are grown-ups, but we do feel like people do need the context in that moment to understand, hey, this might be a little risky, or maybe you saw this on a message board. We just want you to have that context. So before this even started really hitting a fever kind of pitch, we had that safety label on GameStop, on AMC, because we knew people might see, Dave Portnoy tweet about it, or they might see it on a message board and not have that full context of, hey, you might hear about this stock, but just so you know, this might be a little riskier than other things. And once they kind of see that label, if they go to invest, they actually have to swipe to confirm that they have that context. So we had that built in and ready to go, and we felt really good about that. We felt like that was the right kind of step to keep people, freely from being able to do what they want to do, but have that information.
Is there a difference between a public member, user, customer, I don't know what you call them, that's like playing for fun to be in a community and to kind of play with a little bit of spare change, and the people that are there to make money? Like, can you tell the difference between two users?
So we're actually a predominantly long-term community. We actually did a survey in the spring, and 74% of the people in there said they were mostly long-term. And in addition to that, unlike some of the other trading platforms, we don't allow day trading. We have a no day trading policy. And so that's the kind of behavior of more sort of speculative, short-term, riskier, usually investing style. We don't offer that. We also don't have options or margins. Margins are where you are allowed to trade on with borrowed money, essentially, which is also potentially riskier again. So our community and our app was already sort of tailored to a more longer-term audience. So you really don't see much of that same sort of behavior. Now, of course, people are participating in some of these stocks. I think we built, again, in the app, ways for people to kind of frame their mindset around what something like what's going on now is versus dollar cost averaging into an ETF over multiple years. And actually within your portfolio page on Public, there's two sections, and one of them is a long-term portfolio. If you want to mark something as a long-term, you actually can drag it down. And if you go to sell that stock, we'll remind you that you've held it less than a year. And again, educating on the difference between short-term capital gains, long-term capital gains. So we've really been educating people this entire time on the mindset of a shorter term move, what that means, and something that's longer term.
So when you say you don't allow, yeah.
I was gonna say, full disclosure, I'm a public user. I'm like, it's been a few months, and I feel like I've learned more in the last few months using public than my entire life. Just, I don't know, taking in like financial information. And I do appreciate sort of those like not nutrition labels, like safety labels and warning labels. I thought you did a really good job of just keeping users informed this week.
Yeah, thanks for that. And I think I agree. I mean, even I'm in there all the time. I'm learning. I think it's sort of like when you're learning a language. I remember in high school, I thought I was like the best Spanish student because I like memorized the vocab and like the grammar translations. But then I remember I went on a trip to Spain and like was there where people were speaking the language. And only then did I really kind of step up. And that's kind of what public and really fractional allows you to do. You know, we have a lot of college students in the app who maybe have $50 to build a little portfolio with slices of stock. But the ability to participate with a smaller amount of money, it has tons of value in being around those conversations, taking them in and learning as you build your confidence and build the value of your portfolio.
So talk about Wall Street bets. Like what, first of all, for those of you who've been living under a rock for the last 2 weeks, what is it exactly? Like, is it a game? Is it a bit? I can't quite figure it out.
Yeah, Wall Street Bets is in a Reddit community, a subreddit community of people. I think there's 2 million people in there, but I'm sure they've grown past that number. I'm actually not a member of the community myself, but from what I know about it, it's people sharing trading tips and ideas. The difference between sort of that sort of community and ours is the Reddit community is inherently anonymous. Public, by virtue of being one part investing platform, one part social network, means that every single member in our app is actually verified, because based on FINRA policy, to sign up for a brokerage account, we need to verify your identity. But the Wall Street Bets movement was kind of, these conversations started around, one user noticed that there were specific companies that were heavily shorted. And did the research. And from my knowledge, this was public knowledge, wasn't insider information. There's public knowledge out there that a lot of these hedge funds were heavily shorting these stocks. And so from there, they used that community to fuel a movement that grew over time and is being effective towards their end goal at this point. TBD kind of what happens next with that. But that's kind of the backstory on Wall Street Bets.
So you guys clear your trades through Apex, right?
Yes.
And Apex also does the other guy, or a bunch of others, obviously. Like,
yeah, they service a few others. I think Robinhood has their own clearinghouse.
So, like, how you had a conversation with Apex and they've been responsive to you? Can you kind of just tell us what you can about that?
Sure. What happened last week was, I believe it was Thursday, some of our competitors chose to halt the further buying of securities like GameStop and AMC. And that is a complex explanation that I'm probably not the best person to speak to their businesses and decisions. A lot to do with kind of their business structure and how they were managing risk. But for us, we were on Thursday when some of the other brokerages halted buying, we kept ours going. In partnership with Apex. And then at one point of the day, I think it was maybe around 11 a.m., Apex made the decision that they were also going to halt the further buying. We immediately let our community know via in-app posts and on Twitter, let them know what was going on. And our team was, on the phone with Apex, figuring out how do we get this going again. We really felt like because we had that safety label there, from our point of view, and we could only speak to what kind of makes sense for our business. I can't speak to kind of what makes sense for our clearing firm. But for us, we felt like, they had the right context and we would have liked to have kept it open. So fortunately, we have a great, working relationship with Apex. They were really cooperative with us. And I think by like 2:30 p.m., the ability to buy was resumed on our platform.
I'm gonna actually switch gears for a little bit because I want to get into kind of the social ramifications of all of this. So when Steve and I were prepping for this week's episode, yeah, I think we sort of were debating the merits of whether this is just one big like mob mentality stunt on the web, or whether there's like a larger movement here. Like some people are speculating that this is the real Occupy Wall Street, that this is a far more effective signal that financial institutions need to be challenged and that wealth distribution is not fair and that there's a more equitable way. I guess, can you talk a little bit about where you land? Like, do you think this is temporary? This is just the internet and Redditors being the internet? Or is this kind of here to stay?
Yeah, it's tough to say. I will say I think it's important. It's an important moment because of the participatory nature of it. I think the difference between this and an Occupy Wall Street is that people are actively participating in the very system that they're trying to disrupt instead of just trying to disrupt it by other means. And by virtue of creating this movement where people are actively participating, these conversations are out in the wild that are great for people just to understand the dynamics of these systems and how they work. These are topics that people normally aren't talking about. And now you have people saying, what is a short seller? What does that mean? What is a hedge fund? How does that work? And I think that's great. At Public, we've always been about getting this stuff out into the open. We believe that for too long, these terms, these systems have been, frankly, purposely meant to feel complex and out of reach. So when you can get these into the open and people can learn, whether it's just following memes in culture and learning that way, or actively maybe putting a little money in themselves, that piece of it is great. We do believe that with this access, and this is a really important principle at Public, is this idea of access with responsibility. Obviously, these are potentially risky endeavors for people. And I think one misconception of the movement overall is that it's this like monolith of just this internet mob. And it's much more kind of complicated than that. If you actually look at the initial conversations on Wall Street Bets, how this was all sort of started, they were pretty sophisticated kind of thinking going on around the strategy of how that group was going to approach this. Now, what happens over time, though, is as it grows into a broader movement in culture, you have people coming on to the end of it who are farther away from that line of thought originally. And that's where it could potentially get dangerous if people don't understand the why behind it or the strategy, and they're jumping on because they saw a friend tweet about it or something. But if we can balance this idea of access with education, I think that's how we really change the culture of the stock market. And that's kind of our big mission. And, any point when people are getting these topics out into the open, I think it's a good thing. We just need to kind of build, like, companies like ours have a responsibility to educate as that happens.
So part of what's been interesting is to listen to these quotes. So I'm just going to read you two quotes because they're so different and so the same. So here's the first quote. For years, the stock market has been less and less about the value of a business and more like casino gambling, said Senator Elizabeth Warren, Democrat of Massachusetts. So she's basically saying that increased regulation of Wall Street shortly after the market frenzy over GameStop will begin this week. And then there's another quote. It's not about Republicans or Democrats, said Newt Gingrich, former Republican House Speaker. It's a lot of normal people, everyday people beginning to figure out they got ripped off. So, like, I'm not sure I've ever seen Elizabeth Warren and Newt Gingrich agree on anything. Like, which to me makes it seem like this isn't going, like, this is like, it's the rare bipartisan moment where the democratization of Wall Street seems like everyone, and it doesn't seem like they're just, and then AOC, who's been super pro, individuals having more power and voice. That would seem to be a good thing.
Yeah, I think some of any attention on this right now, I think is great to kind of have these debates in public and talk them through. I think it's interesting whenever, we do a lot of work with different communities, and whenever we'll do like an investing 101 talk or something, like the first kind of myth to bust is the nuances of profiles of investors. I think I've seen headlines and stories just chalking everyone who's investing right now, who's a young person, up to somebody who's looking at the stock market like a casino. I'll tell you that that's not true. I'm in our community every day. People are, again, mostly long-term investing, looking at the fundamentals, but it's not black or white. It's not you're just this kind or that kind, or you make different moves for yourself based on your risk profile, based on your financial circumstances. But to kind of blanket statement call every young investor who's not using the investing platform that your dad used, someone who's treating it like a casino, I don't think that's fair or fully accurate. And so it is all about this education. What is the difference between day trading and investing, and how to think about that? I think one thing that kind of has kept people a little intimidated by the stock market is that they equate or conflate the two. I get questions all the time like, oh, I can't invest. I don't have time to look at the charts all day. They don't realize the difference between like a technical analysis of a stock that what a day trader would look at, needing to actually follow the chart, several hours during the day, versus someone who's looking at a business like Shopify or Microsoft and saying, you know what, I believe in this business long term. I'm going to put some money here, and understanding that you don't really care what's going on with that stock day to day because you have a longer term mindset. So even that step, and I think that in the headlines is really, really kind of conflated in favor of these like gambling day trading profile, and it's broader than that, really.
So isn't it inevitable though that someone on Wall Street Bets is going to go on and do some kind of pump and dump play where they're going to say, hey, I've got this crappy stock, but I'm going to talk it up and I'm going to make up some quotes and make up some data, and by the time anyone notices it's fake, I'll be out? Like, isn't that what the SEC has been concerned about?
Yeah, I can't speak to the motives of Wall Street Bets. I know there's a lot of conversations around at what point does the movement in the cause, at what point does that people realize they can make some money, get out, and then things kind of maybe shift. But I will say, yes, pump and dump is not okay per the SEC. That's something that they're looking at. But what I think the argument I've heard on the Wall Street Bet side is that it's no different than being at brunch with friends and telling them what you're investing in, or somebody going on CNBC with a different kind of megaphone promoting something. So it's the debate is really like who has the megaphone and how is the information being spread. Social is obviously much more complicated than any of those other examples.
So that's the first thing you said I actually disagree with. Because when I go to brunch with my friends, they sit across the table from me. I went to college with them. I worked with them. I know who they are. I know which ones I trust and which ones I think are kind of bullshit.
Yeah.
But like the problem with trusting friends on Wall Street Bets is that they're fictitious. They're, they could be whoever they want to be. They literally could have two characters arguing with each other and create a drama where I'm calling my other persona a name and people are watching this battle that so that I think is where things change. But I want to understand, you said something earlier that I thought was fascinating. So if Alexa decided that she wanted to be a day trader and she went in and started getting excited and moving things, like how would public.com say to her, hey, we don't do that here? Like, would you stop her?
Yeah, with the no day trade policy, a user will get 3 warnings if they make intraday trades. So within one trading window, one day, buying and selling a stock. We give people 3 warnings, and then the 4th one, they might have account restrictions. So that's kind of how we enforce it. And like I said, most people are long-term. So the culture of our community is pretty different than a Wall Street Bets or other communities. It's a broader sort of tenor in the conversation. People are talking about business trends overall, like, will at-home fitness continue to grow, or will people go back to their gyms? Like, broader kind of conversations than let's talk about this one stock or let's talk about this one chart. And that broadening of the conversation we think is important just to make this more accessible. We have people who are in there from creative industries, healthcare experts, educators. When the topics are broader, more people can get into them. It's much more human and accessible to talk about a trend in a company or business than it is a chart. And that's really kind of strategic in the way we've built that community to make it possible for more people to enter these conversations in ways that they can relate to.
Alexa, did you get have you gotten a warning yet?
No, I don't day trade. I'm still like a newbie. Steve, offline, you said something to me that sparked, like, I don't know, an idea. Katie, I'm curious. Like, Steve basically asked, do we think that with fintech influencers, platforms like Public, could the future of the platform actually be getting your everyday person to turn into a broker or like a wealth manager? So for example, like, I follow Scott Galloway. I really trust his advice. He was like super bullish on Lemonade, Airbnb. I've already made money on those stocks. Could you see the future of Public getting us to a world where I would wire Scott through the platform like $10,000 and say, Scott, I trust you. You know what you're doing. Go manage my stuff for me.
Yeah, that specific kind of example is definitely not on the roadmap. I think it's more about people like Scott creating great content and educational sort of content in the app than it is telling people what they should be doing, or even in your case, charging people for actually the managing of someone else's money. And that's kind of a big difference too. It really isn't about influence, because there's a lot of kind of known people in our app. It's more, the purpose of those people being in the app is almost more to say, these people are people you recognize. They're on this journey with you at various levels. We have Paul Rabel, who co-founded the Premier Lacrosse League, in there. He knows a lot about sports business, streaming media platforms, but he's also there to learn from other people on topics that he has less experience in. There's Chloe Coscarelli, who's a vegan chef and author. I think she founded the By Chloe restaurant chain. This is her first time investing. She's in there with all of our members kind of on the journey. And it's kind of just seeing people that you can relate to and that you admire, whether they're an entrepreneur, whatever it is, on that journey with you, just adds to the accessibility of it. So it's not as much about, I'm going to follow this person, they're going to give me a hot tip and I'm going to make money. That's not really the way the culture's built.
So it's fascinating. You've used this word a bunch of times, and I love that you used it, but I just want to kind of underline it. Like, I think that, I don't feel comfortable in the Robinhood culture. I just don't feel like, I like building things. I'm an entrepreneur. I don't like making money by moving money around. But the idea of like the public culture to me feels healthier, less greedy and more thoughtful. And maybe as we run out of time, maybe just take a second to tell us a little bit about the history of the founder and where it came from and where that culture has grown up.
Yeah, so we launched out of beta in the fall of 2019. From the beginning, the thesis of the company was that what was keeping people out of the stock market wasn't, yes, there's economic inequities, which frankly no one app can solve, broader societal things at play. But one of the biggest things keeping people out is a lack of financial literacy. This stuff is not taught in school. And we actually did a survey and most people end up teaching themselves how to do this. And so we really believe that fractional investing, the ability to buy the smaller shares, is what gives people the opportunity to learn and have a participatory experience. Now, part of that is building a very healthy educational community where the vibe is collaborative and not competitive. I think a lot of the things you see on some of these forums and message boards are screenshots. Look how much money I made. That is just not the tone. And actually the second hire on our marketing team was a community lead, because we knew that that was so important to setting the foundation before we scaled to be super big of what this community was all about. And it's built right into the onboarding. You swipe through and there's community sort of principles that we ask our members to agree to. Argue the idea and not the person. You know, make sure you're backing up any information you share. Be thoughtful with your content. When you set that culture early on, the early adopters, the early users embrace it. And as you scale, you see that that culture maintains. It becomes harder to maintain the larger you get. But when you have that you're investing in that culture from the beginning, we're at a place now where the community is growing really quickly and we've maintained that. And that's something I'm really, really proud of. And just calling out, we're 40% women, 45% people of color. Again, we don't want just more people investing in the stock market. We want more people who are different than kind of the communities that you've seen in the past that are, quite frankly, quite homogenous.
Katie, this has been fantastic. Good news. Next week's going to be totally chill. You probably do half days. Yeah. Thank you for coming on and sharing, and hope next week is awesome.
Thank you so much for having me on. These are really important conversations, and I appreciate you guys giving me the time.
And you're also hiring, right? We got to plug your hiring. You're growing.
Yes. Sorry. Public.com/careers. Hiring in product, marketing, customer support, engineering. Check it out and definitely apply if you're interested in joining us on our mission.
See you soon. See you next week.
Bye.
Alexa.
Thanks, Katie.